When cash is king in this kind of a market, what we've got in 2025 is materially different, I would say, than the last 2, maybe even 3 years, and that is volatility, known events, unknown events. It's just much more even than I would say a two-way market. It's a minefield, and a lot of investors are not actively having their money managed. They're in passive managed assets like ETFs, like index funds. And so when you've got a market like this, it's going to really end up hurting a lot of people because you're going to see big wild swings. But then you look at your statement on January, end of the month, February, end of the month, we just closed out, and here we are in March. What have we done year to date in the S&P 500? There's distinct advantages for being in cash, and it's the number one thing. I mean, if Buffett's in cash, that should tell you something right there. The 6 signs, signals, whatever that I use, and it might be beneficial to you to know when your cash is king to trade into or have an inventory. Number one, there's no clear setup. And I don't mean any setup, an A plus setup. What's your A setup, A plus setup? If that's not clear, you should not even be trading. If you've got a time tested A plus setup and you know when it's going to likely with high probability appear, then you want to have the cash to be able to take it. So if there's not a clear setup, then you should have a high inventory of cash. Number 2, range consolidation. Sometimes you'll have A plus setup and it will be in range consolidation. I don't like that. I like it when it's not range consolidation and I've got my A plus. I'm not saying I haven't done it before where I've taken an A plus. I'm just saying it's not the most ideal. Number 3, higher time frame is downtrend and below or above the middle Bollinger. So you can be an uptrend above the middle Bollinger. And when I talk about HTF, higher time frame would be weekly, monthly, daily, 8-hour, 4-hour. Those are higher time frames. So I always like to throw either a Keltner channel or a Bollinger Band, find out where the middle is, and then understand very quickly downtrend or uptrend. And currently, as I shoot this in the March 5th European London session, we are in a downtrend for several days. Seasonality number 4 is the big overlay. This is going back where I've preached, go back, do the research, hire somebody that has the research, but know your seasons, know when it's high probability bearish, high probability bullish. And I mentioned in the last several videos that we are in a seasonality, and we have been for the last week or 2, and we're winding that up soon, but it's not over. And so it's one of the biggest displacement that we have going back 5, 15, 27 years, this seasonality. That's big. Number 5, volatility is higher than normal. That is the VIX. And yes, we do have higher than normal volatility right now as I speak. And number 6, been just here, but Warren Buffett sold a SPY S&P 500 ETF and he went to cash. That's a big sign. One of the legendary investors, he's not a short-term trader, mind you, but he's in cash. A big percentage is in cash. And he just announced it publicly a few weeks ago. So that's a big deal. So there you have it. That's your guide to when cash is king. And next, I'm going to move on to a tool that I really find is helpful of identifying time, delivery, and your cash inventory. So let's go to that next. Okay, so if you're trading higher volatility markets like we've got and their seasonality, number one thing is when you're trading, when you're looking at the market, is it your time to trade? So time delivery is just as important as price action. So what's your highest probability in time to trade? Is it Monday, Wednesday, Friday? What is it? Is it in the morning? Is it in the late afternoon? You need to have that, not just your A plus setup, but when is it most likely to occur? Now, what I'm doing all the time that it's either in my time delivery or not, I need to grade my cash allocation. So let's say I'm trading micros and 10 micros is my full position. If I'm going to do one micro, it's only 10%. So I always want to grade. If I'm going more than, let's say, 30%, I've got to ask myself, am I in the right time? Do I have the right setup? Is it A plus setup? How long have I been in the trade? What's the duration? Is the location great? Is it an A plus location? So this has helped me in disciplining of when I'm going to trade the volatility. You don't need to have a lot of size on when you've got higher volatility markets. A little bit will do. You could have a 30% position on an A plus setup, A plus location, and make your whole day, even make your whole week if you really get in its A plus. So know that your sizing, your cash allocation is the opposite of your sizing. So how much size are you going to use? How much cash allocation are you going to use is another way to say that. So again, I start off usually in London with 10%, and then I can go if there's a intermediate to maybe a B plus setup, but it's a time delivery, then maybe I go from a 10 to 20 or a 10 to 30, depending on the time. But time of day is just as important as the A plus setup. So that's it. This is a big deal on the grade of cash allocation. And I hope this helps somebody because this certainly has helped me in 2025. All right. Here we are in London. On the left, we've got the trusty Renko Keltner. And you can see here, this was the prior day, right near the close. We go above the upper Keltner and then we plunge before the close to the lower Keltner. Look, this is a low resistance liquidity run at the end of the day. And here's where we're at next day, Wednesday. Remember, it's non-farm payroll week. So, meaning I want to get one trade in and then be done before noon Eastern Standard Time. And so, what is it? It's range consolidation right here. We talked about that in this video already. On the right side, it's an 8-hour higher time frame chart. I've threw a Bollinger Band on it, and we've got a marking here at 35.75. That's 58.35.75. That's one level, and then the prior day low down here where this little candle wick is. These are 8-hour candle bars, and again, this starts the March month, and you can see it's definitely in a downtrend. The mid Bollinger comes in at 59.78.26. But what is this telling me on the chart? It's telling me two things here. Number one, it's not the time I'm going to put a lot of size on. Number two, we've got two known catalyst events. One, I believe, at 8:15 a.m. Eastern Standard, and the other at 10 a.m. Eastern Standard, RTH, regular trading hours, New York time. So I'll watch the catalyst time, 8:15, 8:30. We'll see what happens with price. I'm going to have high cash until that point on my allocation. Why? Because we're range bound right now. There is not enough escape velocity from this red line here on the left. And this is, again, not on a time-based delivery chart. This is just giving me range. And I don't like to diddle in the middle on this chart. On the right, however, what is really important to me is this blue line, 5883.35. That is a 3 EMA on this 8-hour chart, and we just are not really being able to get escape velocity on a closing basis above this. So I don't know that the bottom is in here, and seasonality is still with us. So that's my chart analysis. I'm staying in cash at this point at the time of shooting this video, and I know my catalyst times, and I know the bigger catalyst time later in the week with the non-farm payroll, and the better trading was already given to me in Monday and Tuesday. So I really need to be conservative here on this Wednesday trade. So I can probably most likely take Thursday off if I want and just trade the non-farm payroll, which I've had very good luck on the last year and a half. That's just been golden for me. And I'd like to make and cap the week off with a great non-farm payroll, but there's not to say there won't be a good opportunity here for Wednesday AM. It's just not right now. As long as we've got the range and as long as we don't have any escape velocity here yet on the higher time frame on the 8 hour. So that's it. Thanks for watching. I want to bid you all aloha and keep your eye on the ball, which is number one. You don't need to trade every day. Number two, hang on to your cash, actively manage your portfolio. If this is money you can't afford to have risk on for right now, this is the environment. This is a total different ball game this year, and you really need to watch yourself and play it more conservative if you don't have a lot of experience or time to invest in watching the charts. I'd say know when to be in cash. Thanks so much for watching. For those of you that are new, welcome. And if you've not already done it, please subscribe. Helps the channel. Take care. Aloha. Bye.